Okay. And for the guys who've been around for quite a while, you know that we usually just, breeze through or just run through the the the, the beginner sessions, and then we run through the beginner sessions. Not really just going into detail about the most important things and just repeating stuff. So I'm just taking a more different approach where we just go into depth when it comes to one or two particular topics during that session, and then the following session we pick one or two topics again, and then we just go deep in there instead of us just rushing through the beginner sessions and hoping to sort of like fix whatever we need to during the later stage. I think that's hopefully going to work much better, right? If it doesn't, obviously, I'm willing for us to switch that up. So the risk part of things, I have shared a PDF in the Telegram channel, which everyone should have downloaded. It's very basic. It's very simple. It just gives you like exact lot size that you should be trading if your account size is X amount. Okay, so if you have less than $100 trading account, it tells you what lot size you should be trading, and maximum lot size you should be trading. And if you have a $500 trading account, it shows you the maximum that you should be trading. And if you have a $1,000 trading account, it shows you the actual maximum. Okay, now obviously the lot size will vary depending, firstly, on the amount of risk you want to place per trade, and secondly, on the stop loss that you would like to have. Okay, so the bigger the stop loss that you have, the smaller the lot size you will need to place per trade, right? And the tighter your stop loss, then the bigger the lot size you can actually trade. So if you become proficient enough for you to have 10 pip stop losses, for example, then you'll be able to have much larger lot sizing. Okay, you'll be able to increase your risk, or your lot size rather, without increasing your risk. Okay, if that makes any sense, right? You'll still be risking. Let's say your normal risk is $100 every single time you place a trade. Okay, and previously you were doing that with a 50 pip stop loss. Okay, now you can do that with a 10 pip stop loss, which means your profits will be exponentially higher than usual. Okay, so that is the one benefit that having a smaller stop loss actually has. Right now, it does take a bit of practice and consistent profit for you to be able to say, I'm comfortable in reducing my stop loss. I'd rather you have too wide of a stop loss that it doesn't get hit and the market goes in your direction in many cases, than you getting stopped out every single time, even in trades that you were supposed to be profitable in, and they actually end up in a loss. Okay. Now, going in about the most important topic, for me it is, okay, not sure about everyone else, but for me and some of the more professional guys that I've spoken to, I've been lucky enough to speak to, I mean, the whole idea around trading is that, I mean, no one can really predict the markets. Okay, no one can consistently predict the market each and every time. Say, right, the market is going to do this and that, and then at that price point, and that's where I get in, that's where I get out. I mean, there's way too many participants in the market. All right. Okay, and the reason why they have that sort of notion is because that it sort of removes that feeling that you have control over the outcome of any single trade. I'm quite sure if I'm making any sense. Right. You really don't have any control over the outcome of the trade once you've placed it. Okay. It depends entirely upon the market. And the market isn't made up of one individual. Okay. It isn't made up of two individuals. It's a group of different participants at different levels, right? There's retail traders, there's brokers, there's market makers, there's investment banks, whatever the case may be. And all of these people have different views on what the market, or all of these participants rather, have different views of what the market is supposed to do. And those views obviously translate into what we see as these squiggly lines on the chart, right? The movements up and then down. Okay. So that's all that the candlesticks actually show us, what people or what the participants believe at that particular time. And since we can't control what the market does and we cannot confidently predict every single time with certainty what the market will do, we then use percentage of our account to find out if the next trade that we place is going to be a winner or a loser. Okay, it's like I actually heard something earlier today, and I'm not quite sure where I heard it from, but it was probably one of the conference things that I was at. But I think the guy said something to the effect of there was a guy who wanted to go and to the casinos, Las Vegas, right? It's obviously in the US, and he wanted to gamble, but he didn't want to risk his money. Okay, and because he didn't want to lose his money, and he would play. Obviously, there was a big jackpot available, and then he'd play in his mind. Okay, and then he'd write down the result if he had bet some money, right? And then he would have made money. Okay, and apparently he lost his mind trying to do that because at some stage he would have hit the jackpot. But the thing is, he was playing in his mind and not actually putting some money on the table in order for him to find out if whatever he's doing would have worked or not. Okay, that's it. Actually resonated with me, and which is why I thought I should just bring it up because at the end of the day, you're always doing that when it actually comes to the market. You're always putting in some risk to find out if a trade is going to make some money. Now, your reward needs to be significantly higher than your risk, which is something that we're going to go into probably second half just after we finish the risk part. But your reward needs to be significantly higher than your risk in order for you to be profitable in the long run. Because the thing is, people always have this short-term view about what trading is, okay, and that's one of the defeats. Okay, because if you're looking at trading as something that is right now, next 3 days performance or 1 week performance or even 1 month performance, it's going to be very difficult for you because you're always going to put yourself under pressure. But if you sort of like have the mentality that says, okay, I'm going to risk 1% of my account, right? This trade isn't that important because it's probably one of the tens of thousands of trades that I'm actually going to place in my career, my entire career as a trader. After, if you frame it in that sense, then it becomes a lot less significant as opposed to saying, if I lose this trade, I'm going to die, which is probably the mentality that a lot of people have. Okay, I know I used to have that. Every single trade counted, and every time it didn't go my way, I'd be shaking, anxious, I couldn't stop browsing through the chart. I'd close the MT4 platform and then open it up again, or just go on my phone. Okay, that's anxiety speaking to you. So you don't want to have that anxiety, which is why you want to risk an amount. I'd rather you risk too little than to risk too much, especially during the learning phase. Okay. Now, the reason why people don't pay any attention to the risk side, because it doesn't sound exciting. I mean, it's not that appealing as opposed to us talking about, okay, how the moving average will cross up and then we have this consistent pattern that will bring about consistent results for the next 10 years. Okay. I mean, the markets change. Markets aren't stagnant in a sense. If I've realized that over obviously past couple of years that I've been trading, and mainly through my testing of trading systems, for example. Okay, you get a trading system and you test the trading system from 2010. Okay, from 2010 to 2015, it actually performs dismally, and then from 2016, it explodes. Makes thousands and thousands of percent in profits during that test period from 2016, let's say, to 2018. Okay, why is that? That basically means that the trading system wasn't making money for 5 years, And then for 3 years, it started to make money, which means that something must have changed within the markets in order for that outcome to be different from the previous 5 years. All right. So, in a sense, you always have to keep that at the back of your mind that the markets will change. They will. There will be more participants coming in through to the markets. There will be people stepping away from the markets. Okay. And therefore, the patterns that we might see, there might be guys who see the same patterns that were usually, I can say, confined to a select few, the Illuminati of trading. Those guys used to spot like patterns, and then everyone starts to recognize the same pattern, and then obviously that sort of pattern goes away. It's the same with how in the 70s and 80s, apparently, obviously I wasn't around, it was very easy for people to make some money trading, right? You just needed to buy everything, especially commodities, gold, oil, because everything was going up, right? And trends used to last for months and months and months. But now the actual inverse is true, where the markets range more, the markets move like this, sideways, more than they trend. They move sideways 70% of the time, and they only trend 20% of the time. 30% of the time, rather. So then you have one of the greatest traders of all time, okay, Richard Dennis, making money for decades, and then all of a sudden, during the last year of his trading, he loses 50% of the accounts that he actually has, or the funds that he actually has, simply because he was using a trend following approach and the markets were ranging, which is therefore the need for you to be able to adjust in a sense. Okay. So that is the reason why we use 1% risk. That is the importance of using 1% risk of your account rather than staking your whole account for one single trade idea. I don't care who calls that trade idea. It could be Paul freaking Tudor Jones. It could be Bill Lipschitz. I don't care who it is, but there is no way to really, really, with 100% certainty, know how the outcome of the trade that you're going to place is going to be. Right? We don't know that. Okay? We can only use probability, and obviously probability will work over time. Right? You can't tell me that even if let's say you win 80% of your trades, right? 80% of your trades win. That's actually good. But the thing is, you don't know which is going to come first. Is it going to be, are you going to win 7 trades? Okay. Lose 1, right? And then win 1 and then lose another one, whatever the case may be. Are you going to win 8 trades and then lose 2? Or are you going to start with the 2 losing trades and then end off with the 8 winning trade? So if you put that at the back of your mind, that let's say now we have a sample size of 100. So 100 trades, out of every 100 trades, you lose 20 of those trades and you win 80 of those trades. Right? What if the first 20 trades that you actually lose or you actually take are going to be losers? The first 20, imagine that. The first 20 trades that you're going to take, they will be losers. But the following 80 will be winners. 95% of traders go through 20 trade loss, will definitely not be around for these 80 trade winning streak. For this 80 trade winning streak, 95% of traders will be around for that. And that is the reason why we emphasize that 1% is crucial, because it keeps us in the game long enough for us to get through to the winners. It's one of my favorite things that, in trading, you can't jump over the losers, right? You can't go under the losers. You can't go around them. Okay, you just have to go through them, basically. Okay, there's no way for you to avoid them, right? Just take them head on. But as soon as you go past the losers, you're gonna get through to the winners, right? So, and there's a different mindset that you need to have, obviously, while going through a winning streak as well. Okay, A lot of guys get excited about a winning streak, but the less excitement that you have, sort of like impartial with the markets. You sort of like need to have this I don't care type of attitude about the results, whether I make money or I lose money. But what you should care about most importantly is the actual process that you go through before every single trade. So as I was saying then, 1%, right? That's where you need to start off. So depending on your account size, um, you guys know I'm not a huge fan of demo trading simply because, right? Simply because it doesn't have any emotional attachment to it. Okay. And a lot of problems or issues that arise when it comes to people trading or to new traders, or even experienced traders, is the emotional side of things. So you're practicing one part, right? The 20% that, 20% of your results will probably come from the technical side, and then 80% of your results will come from your emotional side, right? Your mental toughness, so to speak. Because you know that if you have the emotional side in check, right, then it's much easier for you to trade. You can even trade a system that will win 30% of the time or 40% of the time and lose 60% of the time. But if you give that sort of system to someone who is emotionally weak or emotionally undisciplined, for example, then they're probably going to have a very hard time sticking to that system, and they'll always constantly be making changes, and they'll constantly always be jumping into trades that they're not supposed to get into, right? Missing times where they're supposed to be starting, let's say, with their analysis and all of that other stuff. Okay, so it's basically process, right? Until that emotional as well as sort of like the physical discipline is etched into your mind and into your routine. So as I was saying then, the 1%, right? The 1%. So if you basically want to get into that 1%, the top 1% of trading, you need to start risking 1%. Okay, so the top 1%, that's where most of the money is actually made. The top 1% of retail traders, that's where most of the money is made. Because the 95%, obviously, we know what their story is. And then you have obviously guys who are making profit, but not as much as they would if they had a bit more sort of like emotional discipline, or guys who were good enough technically, but don't know how to manage the risk. Because I know a lot of guys who make, some very neat and tidy profits, 2 or 3 months. They're just hammering away. But on the fourth month, it's all gone. That's 4 months gone, and that can take a lot of emotional, can put a lot of emotional pressure on you and strain, which will then affect your future trading. You'll start questioning whether you know how to do this or not. These guys are brilliant. Some of these guys are way better than I am when it comes to technical analysis, but they can't stay in the game long enough for them to realize that they're actually good enough. Okay, so if you guys have any questions so far, guys can shoot. And as I've mentioned in the previous videos, the 1% rule, you can start that off as your base. Okay, when you're calculating your risk, you can use the forecast sheet in the Telegram channel. Okay, or you can do it yourself. Let's say you have $1,000 account. Okay, $1,000 account, and you want to risk 1%. It's like $10, right? So out of $1,000 account, you want to risk $10. So if you only risk $10 out of a $1,000 trading account, do you feel like you'd feel a lot of anxiety and a lot of strain? You could probably forget about the position as well. You can just let it go through to its take profit, or let it go through to its stop loss. It won't really take a lot of emotional pressure, because if you do lose that one trade, okay, you still have $990. in your account for you to come back. Because the most important thing that comes when it comes to trading is having money to come back and trade the following day. Right? If you have $1,000 and you lose $10, you're still okay. You can still come back. But if you have $1,000 today and lose $1,000 today, you have nothing to come back with. Right? You have nothing to sort of like rectify whatever mistakes that you actually made previous day. Sometimes it might not even be a major error that you actually made. But if you don't have enough discipline for you to trade a proper lot size that will not give you anxiety, will not give you a high blood pressure, and land you probably in the ICU, then I mean, you're probably not going to make it long term. Okay. Right. So, as I was saying, then that is basically the risk side of things. Then you can just you divide that $10, for example, right? So if you're only risking $10 and you divide that by the amount of pips that your stop loss actually has. Okay. So if your stop loss is 10 pips, right? So it's going to be $10 divided by 10. Okay. And that is 1, right? I hope it is. Okay. So you think that is 1 lot, but it's actually not. It's basically $1 per pip. Okay. So which means if you make $1, one pip, if the market moves in your direction 1 pip, you are going to make $1. Okay. If the market moves against you 1 pip, you are going to lose $1. So that is actually the pip value. Okay. I do have a that explained in the Excel spreadsheet, so it's not too much of an issue right now. So you can just go on through and download that. I'll probably just throw it in the group again for the guys who came in a bit later, so who actually missed it. But that is basically a very simple, straightforward equation. If you can stick with that, on a consistent basis, and you can sort of like improve your technical side of things. Because I think the most important thing during the learning phase is not to lose too much, right? Because you're probably going to lose some money, right? You're probably going to go through some patches where you're like, I don't feel like trading today. I don't want to trade. I just want to take a break from trading. Keep the losses small while you're still learning, okay? Because then you'll be in a position, once you become proficient and really good at this thing, you can ramp things up. Once you become really good and be at a level where you have an extreme level of confidence in your skill, then you can start increasing your risk incrementally to sort of like accommodate your skill level in a sense. Okay. So if you're not yet consistent for at least 3 months, then you definitely should just be sticking to that 1% rule. Okay, now the risk reward side of things. Okay, I touched on a bit about that earlier. Okay, I doubt we're gonna have enough time to finish it, but the risk reward basically is how much do you want to put on the table to find out if the next trade is going to be a winner or not. Okay, so for example, if I want to make $30, for example, per trade that I actually place, which is obviously the wrong way to look at it, because when you're placing a trade, you never look at how much you want to make. Okay. The first thing you look at is the risk side of things. Okay, how much will I be okay if I lose $10 out of this $1,000 account? If the answer is yes, then you look at the reward side later. But you always start with the risk side to say to yourself, okay, if things don't go my way, am I going to be okay if I take this loss? Right? Sort of like envision the loss. Take it emotionally, take it psychologically. And if you're still okay after that, then fine. But if you say, if you don't have, let's say, a stop loss, for example, so if you're not using a stop loss and you're using a bit of a high lot size, the one thing or the one question that you should be asking yourself is, am I okay with losing the entire account with this single trade? So you're like, am I okay with me taking 100% loss with this one single trade? Because that's very possible when you're not using a stop loss. And if the answer is yes, I mean, then go at it. But if the answer is no, which I hope it is, then you'll probably want to tone down your lot size and place a stop loss. I mean, I'd rather you have a very wide stop, as I said, than no stop at all or a very tight stop initially. Okay. So the risk reward, in a sense, is just basically how much you want to put down to find out if your trade is going to make or if your trade is going to lose money. Okay. All right. Does that make sense? So what you want to have is a much higher reward consistently than the amount you actually risk, because that will mean if you have a 50-50 trading system, meaning you win 50% of the trades that you take and you lose 50% of the trades that you take, then if you're consistently making $5 and you're consistently losing $1, right? Half the time you make $5 and then half the time you lose $1, you will still be way ahead of everyone else because you're going to be making a net profit of $4. Okay. Or let's just use $100. You bank $100 on this trade, and the next trade you make $500, right? So that is two trades, one winner, one loser, right? That's a 50% win ratio, but you have a net profit of $400 simply because you have a higher reward for each risk that you actually put. Now, the risk reward ratio is just like anything, right? Those of us who grew up on these imitation drinks and stuff like that and Oros will know what this looks like, right? 1 part water for every 2 parts cold drink, for example. Okay, but in this sense, it just basically means 1 to 2 for every dollar that you risk, you have an opportunity to make $2, right? So that will translate if you're risking $100. So for every $100 that you risk, you have the opportunity to make 200 US dollars. All right. Okay, guys, we have about 5 minutes left in tonight's session. Trust everyone is still with me. No one passed out yet. Okay, we're going to take a bit of a breather, then we're going to come back. So if you have any questions, you can shoot now. I was expecting everyone to send me through questions that they actually wanted me to sort of like answer, for us to have that question and answer session. But it does seem like some of the guys who are here tonight weren't here last night to hear about that. So what I will do, okay, the Q&A session, I'll postpone to tomorrow, right? So we'll have our normal 7 p.m. time slot where we do our advanced session and then take sort of like a 5-10 minute breather and then come back and answer all the questions that the guys might have, right? It doesn't matter whether it's a beginner question, whether intermediate, advanced, anything that has to do with the markets, right? You can just text. I'll have to send through the link for the WhatsApp there, but I'm guessing everyone has the WhatsApp digits, and then you just ask whatever question, even if you just say hi and then you post your question. Okay, don't need to wait for a response. Okay, because sometimes it's not even me responding. So just say hi and then post your question. I promise you, I will attend to your question during tomorrow's session. But like I said last night, you need to send the question to me tonight in order for me to prepare or have enough time to prepare for it. Okay, because I don't want to just come through and just start rattling things off the top of my head. Okay, so it's better, or because I'm pretty sure I'm going to get guys sending me questions 10 minutes before the start of tomorrow's session. Okay, those will be ignored. Just send me whatever question that you have. If you have multiple questions, just send them through to me, because what I want to do is just set up examples. For example, if we need to look at a chart, so if we need to look at a chart, I want to set up examples, right? I want to do save images, mark them up, draw up a few stuff on them to better illustrate my point. And I can't do that with 10 minutes left for us to start with the session. Okay, I hope everyone understands that part. Okay, trust everyone is in agreement with me on that one. All right. So if there aren't any questions, guys, I don't see any questions today. It's actually been just me. All right. But I'm not complaining. I'm kidding, guys. I actually am. It's nice to actually get those questions every now and then. But hopefully, if there aren't any questions, it means hopefully I'm making sense for a change. All right. So I won't be talking about the signals group now. I think I did already address that. So signals, also just WhatsApp, guys. If you have anything related or any questions related to the signals, okay. If you don't understand, the WhatsApp in the Telegram channel for the signals, okay. Same number, text through on the WhatsApp number, and then we'll set up everything for you, okay. And all the guys who are in the copycat trading system, everyone should be linked up properly, right? We did have a minor disconnection because obviously the ESCOM and the load shedding, so our servers on this side weren't running because they switched off. So now we just got different servers, so we uploaded all the accounts there. Everyone should be able to see their progress. Whatever trades that we actually placed on our end are getting filtered and copied onto your account. So if you do have an issue there, if trades aren't being copied onto your account, please let me know, right? And just please be patient, guys, when you text, right? It's only one person responding at a time on the WhatsApp, and there's quite a few people who actually text, especially during the course of the day. Right, in the evening showcase, it's me, right? So you can text anytime between probably 6 and 1 a.m., but sometimes during the day gets a bit busy. So just please do have some patience there. I hope you guys enjoyed tonight's session. Right, I will see you guys tomorrow. Make sure you send those questions through to me, right, so I can prepare and make sure that we're all on the same page for tomorrow's session. And yeah, hope you guys enjoy the rest of your evening. Cheers.